Labdien, darbie investoru kluba skatītāji, klausītāji, biedri, draugi, atbalstītāji un visi tie, kas skatās. Šodien man ir tas prieks un gods jūs vēlreiz aicināt uz mūsu tādu tiešsaistes sarunu, kur mēs aprunāsimies to, kas notiek investīciju pasaulē, un parunāsim par investīcijām. Šoreiz man ir pievienojies Igaunijā pazīstamākajiem investoriem Ļevs Dolgačovs. Es pēc brītiņa arī viņu iepazīstināšu, bet šodien mums plānā ir parunāt ne tik daudz par tādiem ikdienas ieguldījumiem, bet arī pieskarties mazliet plašākām tēmām, tādām kā riska, kapitāls, un vienkārši paklausīties un parunāties ar investoru, kuram ir ļoti plaša pieredze dažādos investīciju veidos un kuram ir ko pastāstīt. Bet es īpaši daudz garumā nevilkšu un uzreiz uz skatuves aicināšu arī Ļevu. Hello, Ļev.
Hi. I hope you see some good things. My Latvian is still not so good.
Only good things. Hello and welcome to Investoru Club's podcast. It's my pleasure to have you here, and I've heard about a lot of interesting things about you in a good sense. When always someone says that word interesting, it means like, but no, in this sense, good things, and I'm very happy that we can have a short, or maybe not too short, talk today about your experience, how you see the markets, and where do you see the opportunities, and about risk capital and all that. But maybe before we jump into the into investments, maybe you can share your short CV or tell us a little bit more about yourself.
Okay, first of all, thanks a lot for inviting me. It's a pleasure to be here. Latvia feels like second home recently, so really great to be invited. Okay, about myself, I guess I will not make it too long. If anyone is interested in all these boring details, they can probably check my LinkedIn profile. But what's probably relevant is I'm investing for over 20 years now. Started in 2003, and then it kind of started to flow. I'm serial entrepreneur. Built several not so huge several businesses in my life, and for last couple of years, my main business is investing. So I run investment company that manages my own funds and my family funds. I'm also very active in Estonian investment world, to some extent in Baltic investment world more and more, and in startup ecosystem and angel investing scene. Been in the board of Estonian Business Angel Network for a while. Been a chairman of Estonian Business Angels Network. Been in the board of the directors of European Business Angels Network, like a big organization, headquarters in Brussels, connecting all these business angel networks, and involved in many startups and in some other. It's getting too boring. You can check my LinkedIn page.
But maybe you can share, how did you start? How do you start investing? You mentioned 2003, but do you remember what was your first investment and how it went from there?
Now, one which is definitely worth mentioning, as I'm virtually being in Latvia now, is this year I joined the supervisory board of Eleving Group. That's most recent big career position I've got. So you asked about how did I start?
Yes. How do you start, and what was the first investment? Do you remember?
Yeah, I still remember it. I'm not sure. It's 50-60 chance. I started with typically Tallinn Stock Exchange. It was not Nasdaq at the time. It was like I think just Tallinn Stock Exchange. So it was either Saku brewery stock, or most likely it was Hansabank. Like I had them both in my portfolio at the beginning. I just do not remember which one was technically the first one, but Hansabank was the one that gave me a lot of confidence, because at that time it was a no-brainer. Like I don't know, like some buy Bitcoin, like with thesis, it will only grow. Like it was the same with Hansabank at that time. You just buy more and keep enjoying watching your portfolio growing more and more and more. You just regret, okay, why did I not invest more yesterday? Okay, let's invest more today. So it was like to the moon and till the end, till the very end. Like when Swedbank bought them, it was basically keeping constantly growing. Ironically, I lost my biggest loss, at least at that time. I got with Hansabank investment funds, because their funds also kept growing, and I started to invest in their funds because it was like 60% per year growth, something like this. So again, just buy and hold. Nothing more was needed. And then what happened? Year 2007 happened. And basically overnight markets crashed, and then, then I decided. I remember I lost basically overnight. I lost over $1 million of Estonian crowns, which like by modern means is not so huge amount of money, like something like 65,000 euros. Still not small money, but at that time. It was way bigger than now, and I lost it very fast. But it was mostly like it was paper loss. Like it was paper, like profits on paper. I obviously I invested less than I lost, and then I decided, okay, no problem. Like I will wait. I'm holding.
Yeah.
But the guys who managed the fund decided, the fund I had the biggest holding in, it was Eastern European fund, like with Eastern European equity and other assets. And then they decided, we will change it for Turkey. And then I've got an email your fund is now a Turkish fund, and if you not agree, you can exit until September 1st. It was not exact day, like just like, but you can have time until September 1st. But email came October 15th. so I had no choice. Like I just found myself, I'm now investor in Turkey, and then I had no other choice to just sell it with and accepting all the loss I've got. But what I learned is it's not mentally hard for me to lose money with investing. Like so I've got this trauma fast, like relatively fast after a big rally, and then I realized, this trauma was not so traumatizing, because I from the very beginning I was quite sure I will lose some money along the way, and will probably win some. And then I understood, yes, this is how this game is being played, and it helped me a lot, like keeping my peace of mind along the way, especially investing in startups. That's the separate topic we can probably discuss later today.
Do you remember what was did you have some inspirational like investors or someone you were following, or like thought leaders from investment world which helped you to realize these that the losses are a normal process of investment, or I don't know, maybe Buffett or some legendary traders or whatever?
No, actually, okay, we think about Buffett. I think Buffett lost a lot of money along the way, but everyone just knows the rule of Warren Buffett, like rule number 1, do not lose money. Rule number 2, look at the rule number 1, which is like, it's funny, it's good story to tell, but that's the problem. In Estonia, we have this new word. I don't know if it's also like in Latvia now, a finfluencer, like financial influencer, like Instagram star, but like with money instead of some I don't know, beautiful body parts or whatever, like helps in Instagram. Yes, most of them, and I recently found I also kind of qualify for the same as I'm speaking a lot and sharing my opinions a lot. These people are mostly good people who just want to kind of share and help and being active, but they all try to be motivational speakers. Like, you can do it, you can win, push it. And yes, this is risky, but make your homework. In the letters of this disclaimer,
yes.
smaller and smaller and smaller. That's the problem. Now I think as some stressful events are happening for quite a while now, with some startups, with bald cap, the thing we had with bald cap and all these things, like, okay, people now realizing it's not so like shiny, or not always so shiny. So influencers now also started to talk about risks more and with louder voices, which is great, because it's the reality. It's you play this game to win, but you will lose along the way. Like it's like just you cannot avoid it. Even Warren Buffett, we can think he never lost money. He did. Absolutely.
Yeah, sure. Yeah, and you mentioned you started with stocks, but your way have been going through all kinds of asset classes, right? And maybe you can share some next few experiences with different asset classes, and in the end, which has been your favorite, or how have you migrated through this way of different asset classes or instruments?
If we would judge by if I take the proportion of asset classes in my portfolio, then I can say, okay, my favorite asset class probably is investing in bonds, because bonds are the biggest part of my portfolio for quite a long time now. But if we would judge by the amount of money I spent, not amount of money, amount of time, I spent, and the emotions I'm still getting, and meeting a lot of great people and getting inspiration, it's startups, definitely. It's like my favorite baby. You keep forgiving everything, and you still like even if your child is a bad guy, and you are mother, you still love him. Same for me with startups. I see so many imperfections in this whole startup ecosystem and this venture scaling world. But I'm trying to make it better with with the things I do, and I'm quite intensively involved in this mentoring startups, being involved in some governmental things about startups, and so yeah, emotionally startups, but money-wise bonds.
Okay.
I also have.
Can you share how did you start in the startup world? You started your own startup and then you wound up in this world, or was it intentional to go there?
Okay, I think it was 2017 probably or something like this, and we had this huge startup hype being happening or starting in Estonia, because we've got again some new unicorns, and like we realized we basically ahead of the whole world in this regard of startups or unicorns per capita or whatever. Like being small country, you can easily have something biggest in the world for per capita. But Estonians really made a great job with startups. Like and our startup ecosystem is great, absolutely. But at the time, like I was reading in the newspaper, like Estonian analog of the newspaper you have in Latvia. In Estonian is Äripäev, like this with the pink pages. I guess you also have it in pink. So I was keep reading about some strange people, like you said, interesting at the beginning, like other meaning of interesting, like making some interesting thing, giving millions and tens of millions to some companies that are not profitable and burning money. And I wanted to understand why they do it. So I decided to join them.
Okay.
And then I learned fast how they do it, why they do it, and there is a whole theory about how it should be done to win this game. But during all these years, I realized you can only win this game by being lucky, like with the lottery, or or if you have a VC fund yourself and you get your management fee, you can also win this game. I'm not being skeptical, just being realistic. Like startups are great. We are like kind of changing the world with them, but it's super risky, super dangerous for investors. If it's part of your lifestyle and you are not ready to lose money with startups, like if you're ready to lose money, hobby is always something you pay for. Same with angel investing, like investing early stage into startups. It's a lot of risk, but a lot of excitement also.
Yeah, sure, but you have to be in a position to get this lucky, right? Otherwise, if you're not in a position, you cannot even get lucky, right?
Yes and no. I personally know two guys who I knew before they made a big win with startups, like investing in startups, like making tens of millions with single startup investment. But both of them were not investing in startups at the time. Like, yes, they were in a position like kind of having money, but that was their only advantage, nothing else. Like, and probably believing in these founders, and then they got lucky. Of course, they not exited early, like they kept it till the end, and you have to do some work. But I still believe both of them got lucky. They do deserve it, and they do a lot to be lucky, as you said. But it was not like knowledge about angel investing or like venture capital.
That was what I was meant is that you're looking for this opportunity, or you're ready to take opportunity, or you have the network of people, or at least you are one of the people who are being spoken to when they're looking for investments. But from a practical point, let's say, for example, some of our listeners, viewers right now, they're thinking maybe I should also get involved in this startup investing world. And what would you say? What would be like a decent way to start? How much money you need, and what would be first steps right now if you have to start over right now?
Okay, there is like classical or modern theory. I will very quickly tell it first. Like there is some very easy math behind this. Okay, you should build a diversified portfolio of startups. It should be like probably 20 different startups or more. And then you should invest equal amount of money into these startups to have it really diversified. And the startups as an asset class should be maximally 10% of your portfolio, because it's super risky. It's much more risky than crypto. Just if people are asking how risky is investing into startups early stage, way more risky than investing in any kind of crypto. Absolutely. So it's the riskiest asset class I know. Then 10% of your portfolio, 20 startups. You mostly cannot get access to investing in startups early stage with less than 10,000 of euro per single start investment. And it makes 200,000 euros should be invested into startups. Then your whole portfolio should be at least 2 million euros. That's the modern or classical theory. I say. Again, everyone I personally knew who won big with startups invested into one startup, and they invested way more than 10,000. Because by diversifying, you basically dramatically decrease your chance to win big. Because you win maybe 10 times with one startup, but then that same week 10 other startups will get bankrupt or something like this. So if you just want to use this asset class to kind of diversify your portfolio, I would advise to find some decent VC fund, with a good track record, with people with the great reputations behind this fund, and then just give them 100 or this 200,000 and let them manage. This is the way I'm investing in real estate. I'm not a real estate investor, but I'm participating with this asset class by giving my money to real estate fund. I'm in 4 different Efton Capital real estate funds. So I'm fine with paying them management fee and success fee. They are super successful for them to make this job. Same with startups. If you just want to diversify your portfolio or participate in this asset class as an asset class, then I would rather give money to VC fund to manage. But if you want to play this game and have fun, then go for it. And then do not follow these rules. I cannot give advice, but what I would do now.
Nothing we speak today. This isn't advice, right?
Yeah.
And a disclaimer.
Any advices? But if I would start now, I would stop reading about any rules. I would only invest by my gut feeling, because what happens? You invest, you follow all the rules. You're making your homework. You have this Excel sheet with all these kind of check, red, yellow, green flags. You invest in startups, particular startup, because A, you like their product. B, you like their founder, because founders first. With real estate, it's location. Same with startup, it's team, and team, or founders. And then you're probably impressed by their plans. A year after, you will discover there is already other team. All of these people are gone. Someone died, someone just decided to go, someone stole from the company and was kicked out. These are other people now. And then you discover the product is also different. The most dramatical case I've seen with my eyes in this life, the company started with producing some kind of robots. And then a year after, they were seriously considering the plans of planting the cannabis. So someone invested in robots, and then probably they could become a kind of cannabis company, small owner. which is funny. Same with the plans. It never goes by the plan. Never, ever. I never seen any startup who would have anything by the plan.
Mhm.
So it's a matter of luck. You can just try to avoid the ones with the bigger chance to fail, but it's impossible to recognize the winners.
Mhm. And maybe I understood like bonds is a big part of your portfolio, but your favorite part is the startups, and maybe there is a lead asset that you're not touching at all.
Okay, if someone would ask me, okay, what asset class to avoid, I would say startups. just like don't try it at home. But unless you're ready to lose this money, like really lose, it's not just like kind of disclaimer. Like, to be serious, I never tried crypto. Just not my kind of thing. I personally do not see the value behind these coins. Behind the technology, yes, but the coins itself, no. But I use crypto recently, like crypto, because if you see Bitcoin is going up or down, you basically see what will happen at stock market in some hours. But right now, what is happening, just it's more leverage, so it's more visible.
Yes.
The way markets move are always reflected in Bitcoin price lately. So it's a nice indicator of the psychology of the markets.
Yeah. Okay. And let's get back a bit to these startups and the VC world. What do you see is the biggest changes in the last few years? Of course, the one thing I think is interest rates, right? But how this has all affected and what are the biggest changes and what do you see coming in the next few years?
You're absolutely right about the interest rate because interest rates affected basically every asset class. What I observed in at least in Estonia again, but I think it's over the Baltics for sure should be like this. Like Estonians' favorite asset class or favorite kind of trying to get rich with investing was for the last decade, it was real estate, getting a loan from the bank. We have this home loan, which you can get to buy your own home, which is cheaper than just getting some loan. And then you get as many of these home loans as possible. You inject as little of your own money there as possible. You leveraged as hell, and then you have this difference between rental income and the interest, or interest plus whatever else, the money you pay to the bank, each month, to put it simple. So and you have this difference, and the bigger is your portfolio, the bigger is this difference. So that's how you try to build wealth with real estate in very simple terms. So what happened now? Interest rate went up. A lot of investors realized it's not working anymore now. And what's worse, they now have negative income. They have to pay more to the bank than they get from this rental real estate, in cash flow terms. So, okay, everyone immediately needed some cash flow asset classes. Like we need a cash flow. What can it be? Bonds. So bonds became a new holy grail of at least of Estonian retail for a while. Startups immediately became not so sexy because for startups it's way harder to get funding when interest rates are up because money printers are not working temporarily. So there is no access to printer money, and many startups just cannot survive it. And so people like retail investors immediately became not like they are not interested in startups anymore, which is probably healthy because I don't think it's the asset class for the masses. That's one thing. Then real estate, like people became cautious with the real estate. Although we were waiting for a bigger like real estate crisis in Baltics, it did not happen so far. Let's hope
Let's
hope it will not happen. Like because
Yes,
like I expect interest rates now to decrease very fast. The only question is what's the level where it stops? It's not zero. It's obviously not zero. Will it be 2%? What will it be? No idea. But I think everyone now expects it to decrease really fast because we see signs of problems with economies everywhere. So my thesis is we will see money printers making brr again, like it was before. So all asset classes probably will start appreciating, maybe not so fast, and it will be very volatile. It will not be like this, because these problems in economy, they will not disappear just overnight. So it will be very volatile, but at the end of the day, I think long term, every asset class that has something real behind it, it will appreciate. And like say, I believe 5 years later, everything will be more expensive than now. Just my gut feeling. Again, not any advice or prediction. Like in the like, if we will measure it by amount of euros or dollars, what will be the value of euros or dollars? Like that's the other topic.
Yes, this is the topic for another very long talk. But one thing that you also, this is about the current market, but the one thing you also mentioned is that you recently joined the supervisory board of Eleving Group, which is a very well-known company in Latvia, and they have had a very great growth story, and they keep on telling in their reports and in some public mentions that they are considering going IPO. For me, it says that they're going to do that. We'll see. But as you have joined, and maybe share your experience, how has it been, and what's been your observations? And because for most investors in Latvia, it has been known as a good bond investment, right? With a very good yields as far as I can remember. And I think I used to work in a bank where and the managers from the Eleving Group were coming and doing the roadshow, and on the other side of the table, CFO and giving us a talk why we should consider. Then it was called MOGO bonds there, and so I also know this company for a very long time. But maybe you can share your experience and how it's been so far, and how do you see it going forward?
Sure. I'm very restricted in the way I can say too much of a good things about company by the regulations.
Okay.
How it did happen? They were looking for the independent supervisory board member, which was like the profile they were searching for was very similar to mine. So that's why we were engaged in the talks. And for myself, I say I also know this company for a long time when it was MOGO, and it all started with the bonds for myself. And I always liked this bond issuer. I can say I liked them so much. I was even brave enough and to make an account in Signet Bank in Latvia, which was like a big mental stress. Like opening non-resident bank account in some other country is quite stressful. thing to do, at least at the first time. But unfortunately, Estonian banks were not able to buy mortgage bonds from me from the market. One of the banks told me, okay, one of the banks tried for over a month, but for market price, just somehow they did not succeed. And then other banks say, we can do it, but we are too scared to buy any bond at the Frankfurt Stock Exchange for any Estonian investor, which is not institutional, like not pension fund or something like this. Like, we are not sure because we are so scared of everything now because of the regulations and these big scandals. So we can make it, but we cannot make it. Sorry, like we still love it, but we cannot make it.
Yeah.
Then I met guys from Signet Bank and absolutely loved this team. Very happy as a customer. Not related to them any other way than being a customer, so I can say good things about them. So that was my first bond I've got through Signet Bank. Like, that's why I opened the account. Like, I just really wanted to get these bonds. Then I bought some other bonds. Always like them. And then again, that's how it all happened. It was a good match. So, after I joined the company, I say, what I observed, what I still observe, is the highest standard in everything. Like all internal things, all external things. Like, it's like everything is kind of matches the highest expectations.
Mm-hmm.
I guess I'm allowed to say that much of a good words.
Yeah, for sure. Well, these are your observations, right? This is not. I think it's all good. And then a few more questions. Thank you for sharing that. And a few more questions that I wanted to ask is.
Sorry for interrupting. Just another disclaimer. Like mortgage bonds I was talking about are not even existing now. Like, there are no mortgage bonds anymore.
Sure.
Like, so just, it was not an advertisement. Like, it was not like, I was not trying to increase the value of the mortgage bonds now.
Sure. Now they are Eleving Group bonds, but they're available for everyone. If they want to see, they should look up and see for themselves what's there and if it's suitable for them. And maybe we can talk once again. We talked about what would be your advice for someone who wants to start with a startup investing, but maybe you can also share some advice for someone who is just wanting to start with investment in general. And I think for us, for Investoru groups, the main audience that we are, this is our core audience, is people who have done a good job. Let's say they are working and they're making good salary, or maybe earn a bit of money in a business, and now they have some 20 or 50,000 euros in their account, and they feel very good, and they have done a great job, right? And but then, kind of money, you go to the bank and you get the understanding that actually there's not a lot of offer for you, so you have to figure things out for yourself. And what would be your advice? I'm not asking for an investment advice, but let's say steps or things to take into consideration or what to watch out.
I see. That's exactly the way I started, like the way you described, like being having a business and making a bit more money than I spent, and then searching some opportunities, and that's how I started. And now I'm full-time investor. Not rocket science, I would say, but advice. My advice would be very easy. Like accept the fact you will lose money. Like that's I'm not thinking all of your money. Just you will lose some money along the way, and you will probably start losing money way faster than you hope for. That's the one thing. Number two would be to not be afraid to lose money. Because just again accept this fact and not be afraid to lose your money. And then if you have these two things in your mind, then all this diversification and asset class management, like, you will start making it automatically. You will not invest too much in one thing, because you will know, like, number 3 is, you will never know in advance where you will lose money. Like, you can lose money with the most solid thing in your portfolio. Like, so just if
like like with the Austrian 100-year bonds, right? You can lose money with that.
Yeah. So just if you're playing this game, if you really want to be an investor, not trader, not like something like this, you want to invest, you're making it long term, you want to keep your money, and you want to make some money with your money, and you're not in the rush. If you're in the rush, go to casino and like red and black probably, but again, it was not an advice. It was a joke. So hate these disclaimers. I think if you're playing this game long, then don't be in the rush. Invest in different things, try different things. Don't be scared to try the different things, even if you find them risky. Try them with a smaller amount of money. You will probably win. You will probably regret you invested too little. But to not get emotional, to not try to double down this thing with the first win. Because like give it the time. There will be more opportunities. Never be guided by FOMO, like fear of missing out. It's every opportunity that, especially the opportunities that sound like only for you, only today, my friend. If you hear something like this, you can invest,
run away.
very little, just out of curiosity, but nothing more, or just run out, because there will be more and more and more opportunity. Also, do not believe in any kind of secret deals which are accessible to some exclusive kind of circle of people only. It's mostly a promotional BS. So that's the fastest way to lose money. Yes, sometimes you get some investing opportunity just because you know people, like investing in your friend's startup. But it doesn't mean this startup has any chance to be more successful than any other startup, just because it's your friend and you trust him. Just think, okay, people sometimes unfortunately die, and you will deal with this person, spouse, or someone else. Can happen, even if you trust your friend. There could be someone else after a while. Then do not think there is some kind of smart money you can follow, being like passive investor, just following smart money. There was an eToro app, I think they had this kind of thing. You can follow some other investors, and that was their thing. You put some money in, and then some, I don't know, hairy Joe from Texas, who is very smart, he invests, and your money are being automatically invested the way he does. There is no such a thing as a smart money in investment world. Everyone, we started with Warren Buffett losing money. Do not blindly follow other people, and do not invest out of the sense I made this mistake. I've done all of these mistakes. It's not me being smart now, teaching other people how not to do something I never done. I done it all, been there, and the biggest mistakes were always some were also, I want to also invest in this company because someone prominent, I don't know, David Beckham invested in this company. So it would be David Beckham and me. Doesn't work this way. You will not make money with this. With the biggest chance, it does not increase your chance to win. If it makes a nice story, you can tell to your friends in the zone, then invest 10 euros, will still be David Beckham and you.
Yeah.
Easy. So be ready to lose your money and love your money. Do not be too kind of love your money, but do not afraid to lose it. Money is the resource you can always get from the system. Printers will still be working.
Okay, great, thank you. And one thing that our readers and members have been asking about, and we from Latvia have limited knowledge about, but we have heard that there's this company Planet 42 from Estonia, which has had some issues, and the point you mentioned that don't follow the just popular or famous people. Maybe you can bring some light or for your views, what's happened there, and what's like what's the core there, and what are there some lessons for Latvian investors?
Yeah, sure. I will try to put it short and simple way. So it was an Estonian startup existing for some years already. This guy fueled themselves with the loan money. They had a rental business in South Africa. Then they started it. I think Mexico was the other country, but it did not went well there. In South Africa, they are for years, and the idea was, okay, it's a rental business. We will buy cars. We will buy. Our customer will choose the car. We will buy it for themselves, not for him. But and then he or she would have a subscription for this car, and they can cancel this subscription any day, like you do with Spotify. Like so, you get the car, you drive it, then probably 2 months after, I don't know what was like. So you decided, okay, I don't need it anymore. I want bigger car. I want smaller car. I don't need car. Like so, you pay some 30 days subscription fee extra. And you leave with a clear credit history. You can get another car from them, or they will be happy to buy another car for themselves. And give
sounds a very good offer. I would like to try it myself.
Sounds very good offer. So my understanding is they ended up with a huge fleet of cars just standing and not being rented, and this business model. For myself, it looks like a bit naive business model because it kind of then all of your cars should always work. All of your customers should be honest people. They do not take car, replace the wheels and tires and everything inside, and then give it back to you in 2 months, which I guess probably could have happened there in South Africa with some cars. I have zero information, but just my guess. It's one of the risks that probably could realize. So, and the other thing why I never invested in this company, or why I never gave them a loan, because there were offers to give them a loan for some years, on the market. There were loan syndicates, interest, something like 20% per year, payments being made each month, kind of looks like a great deal. But each time I looked to their cash flow statements and similar, I realized they get less money in from their operation then they have to pay in interest. I'm not saying about repaying the loans. Just to serve this loan, they always needed more money than they get from operations. So they always needed new loans just to pay interest of the old loans. I don't know how to name it. This geometrical.
Let's not put a name of.
So for me, at least, it looked like this. Maybe I'm wrong, but that's why I never gave loans to them, despite some of these loan syndicates being organized by one of my good friends, in life, it always looked like very, very risky. I never could understand how can they serve this loan. They didn't look like viable business model or viable financing model for myself. But a lot of Estonian retail investors invested in that because it's Estonian startup, and we are all patriotic. Like Estonian startup making somewhere far, far away, like South Africa is right there. Like and our guys, like we have this huge success story of Bolt becoming a unicorn after they started operations in Africa. So of course, Estonians are always searching for something like this, like to invest in this kind of startup. So a lot of people also invested in their equity, but it started mostly. My understanding, it started mostly with the loans, and then some loans they converted to equity. This kind of thing.
But this story is so loud because so many people got involved, right? And the sums are quite large, right?
To my knowledge, hundreds of Estonian retail investors are in with the loans, and I keep questioning where these people realizing they are giving loan to startup. Like that's like I just like I mentioned, like startups. I personally believe startups are way riskier to crypto. Like and giving loan to a startup is like a whole different level of taking risk in my opinion. Like I have in my portfolio one loan I gave to startup from my portfolio, but it's a small loan. They are paying it not only interest, but they're paying it back step by step each month, and and there is a very solid business. Like I understand how they use this money, and it works. Kind of. It was like project they needed some money for. So I also like kind of. I have a history of giving loan to startup, but I hope it will end well. But it's a small money, and it's a bit different story in my mind. But at least I understood. Like my point is like giving loan to startup. I understand like giving loan to startup, so I'm taking much more risk than just investing to the startup. Because you give a loan, you are the first one to lose money before everyone. And even if this loan is have some kind of collateral or covenant, like what you should understand what's behind it. Like probably it's a teenage. So yeah, and now I guess a lot of Estonian retail investors have emotional trauma from this case. People are still hoping because it's now the long restructuring process probably will be started and something like this. Like, I really hope people will get some money back, because it this case badly affects our startup ecosystem first. Like probably in the whole Baltics. Just like Balt cap was not enough for us. Now we have this one also. And other thing is people probably retail investor probably will be a bit more careful with loans now, or like maybe with bonds to some extent. Which is good if people will be more selective with bonds, not investing in every opportunity. Because just having seen code doesn't mean some specific bond is very high quality. I've seen some funny bonds also.
What is your current feeling? How is the Estonian investors feeling right now? Are they optimistic, or are they scared or conservative, or I don't know, whatever? What is your current reading of the mood? What's out there?
I think they are kind of they've got some emotional trauma. Maybe not so big like trauma money-wise. Like I guess, or I hope, there are not so many people being all in loans to this company. But now they are processing it. One of the side effects is some of our investors, they probably realized their portfolios are way smaller than they were thinking. Because I I just had a chat. I had a chat with one of my friends. Like he told me, okay, I lost something like 120,000 euros with or potentially losing 120,000 euros with this startup. I said, okay, that's a lot. Like no good. Then he's telling, okay, but it was only 17,000 of my own money, and everything else was just increase of their valuation from funding rounds. Okay, so then you lost 17,000, and all this 103, it never existed. But okay, now he will invest, knowing this that his portfolio is 100,000 smaller than he was thinking, and it can affect some of his investment decisions, but maybe in a good way. Maybe he will invest. He's a smart guy, so like I think he will just be more careful and invest in more high quality deals, not taking any deal in. Although again with investments, I will still stress, you never know when you will lose your money. It can be with the highest quality deal you're seeing. Can happen. Never know.
Yeah, that is sure, and one would always need to be taking good care of their money, right? And being good. Like you have a farm, you have to be a good follow. I'm struggling to remember the word that I want to use. I have it in Latvian in my head, but you have to take care of your household, right, or farm, and be a diligent owner of it, and take care of it.
You should love your portfolio. Like I remember, like I one of my businesses was making stock photography, like pictures you license in image banks for advertising. Oh, if you will see my face in some advertisement and ask, okay, it's me, like, but it's stock photo someone bought and used, like, so, like, do not trust everything. You can see me as a bus driver, as a dentist, as anyone, basically as anyone. In this advertisement. So one of my friends who was also in this business, and he got some kind of offer to sell his whole portfolio of images for the amount of money which was not acceptable. And I remember him telling me, like, I answered them, thank you, but I love my portfolio. Love your investment portfolio. That's the main thing. Then you will not make mistakes too big.
Yeah. Okay. Thank you, Lev. This is I think this is a very good I think parting words or ending our talk. I didn't want to cut it short or end it so abruptly, but I cannot imagine that you can give a better phrase to end our talk with than love your portfolio, right? And saying thanks for sharing your wisdom and your experience, and I hope that this is valuable for our listeners. It was valuable for me, and I learned a lot of things. And thanks for shining a light on what's happening with this Planet 42 and giving your observations in Eleving Group. So thank you for coming and joining us at the Investoru Group's podcast.
Thanks a lot for this conversation. It was always also very interesting for me. So thanks a lot. It was great.
And thank you to our viewers and listeners. You know where to find us, and investorklubs.lv, or now I will switch to Latvian. And jā, jūs jau zināt, kur mūs meklēt, jāpierakstās ar visur, un nākamais reizēs droši, kad redzam, ka ir izsludināta dzīvā saruna, pieslēdzamies un piedalāmies ar saviem jautājumiem, komentāriem, un tiekamies nākamais reizēs. Paldies jums, visu labu! Atā!